Good evening. I'm Jed Emerson, and it's my pleasure to welcome you tonight to our Impact Assets virtual happy hour. I'd like to begin by acknowledging that I'm coming to you from the island of Manhattan, that is the traditional territory of the Lenape people, and I just want to call that out. Tonight, what we're going to be doing is, I think, a little bit different. I hope a little different, in that one of the best parts of coming together as a community, for me, obviously, is listening to many of our colleagues through their talks and the debates and the presentations. But really, the best part is coming together in the hallways and in the evenings to connect and to engage and to debate what's happening in the world, in our lives, in our field of practice. And so tonight what we wanted to do was to, as much as we're able to, replicate that idea and that feeling. And so, as you are probably familiar at this point, this platform only allows 10 people to share the screen at a time. We will begin a conversation among our panelists, who I'll introduce in a minute. And then we will open it up after about 20 or 30 minutes, and you will be free on the chat and the question and answer side of the screen to input any questions that you'd like. And if you would like to join us on the screen in order to make a statement or ask your question in person, we invite you to do so. And we have people who are monitoring that. If for some reason you're not able to see how to do that, you can just put it in as a question in the chat and say, I'd like to come on, and you'll be brought on for that purpose. I will say that part of my role as moderator is to make sure that the participants do not interrupt or speak over each other. And so I will be using the mute button, as is my prerogative. I'm sorry, that's actually tomorrow night's debate, not tonight, but you get the idea. We want to have it's kind of a different conversation, and we want you to be a part of that conversation. The four kind of areas that we wanted to explore tonight is, what are we excited about in terms of this past year? What's made us angry? What are we mad about? Where do we see progress for the field? And where do we see our field going off the rails? And so we thought that the best way to do that would be to be in conversation with each other around that. And again, usually people tend to loosen up in the evening. They tend to loosen up a little more and be more honest and frank when you get together in these kind of conversations. And what I'd like to do is, this is a virtual happy hour, so we encourage you to raise a glass, whether alcoholic or non-alcoholic. And I actually thought that we could actually have a kind of a word game. And so anytime somebody says either white privilege, authentic, any of these types of terms, that you have to have a drink, but you have to pick your personal favorite word. And I don't think it's going to really work if all 50 of us kind of raise a glass every 5 minutes. And then it also occurred to me that given how much jargon we have in this space, we would probably only get through like 10 minutes before half the people had to log off. So I'll simply say it's great to see you all here. We're looking forward to a fun conversation we have with us tonight. I'm going to ask them to introduce themselves in a second, but we have Jillian Marcella, we have Rodney Foxworth, Laura Ortiz Montemayor, and of course, Margaret Trilly from Impact Assets. So let me just begin actually by turning to Jillian and asking you, you've been a long-time participant in this space, in these conversations, you write about it. What do you see over this past year that's had you most excited in terms of impact investing? And it's great to see you.
Hi, Jed, and hi to the other panelists and the folks who are joining us for happy hour. So 2020 has been quite a year. And I think that what I am excited about, and that might sound quite ironic, is that the intersecting crises, there's the crisis of the pandemic, there's the crisis of the economic turmoil, and there's the crisis of the racial justice uprisings, certainly in the U.S., that's then spilled over to many other parts of the world. There's some uprisings. I don't know how many of you are following what's happening in Nigeria. And so I think that I'm excited because it feels like a point where the desire of those who sort of are in the status quo to keep things as they were is no longer possible. And so that, of course, extends beyond the impact investing industry per se. So in terms of what I'm excited about specifically in impact investing, I think that the general external context has meant that many organizations within impact investing are actually embracing advocacy in a way that perhaps was not the case in previous years. Resilience Capital Ventures, which is the firm that I lead, set up to include advocacy around shaping the impact investing world in finance and investing, in addition to the transactional finance that we do. But it's been good to see folks like, of course, Impact Assets, Impact Alpha, Impact Metropolis, the Beak Center, and many, many others really get very focused around advocacy in terms of shaping the field as well as participating in it. And I think I have to sort of call out people like Darren Dodson, who's closed his $85 million fund that is very specifically about racial justice in the impact investing space. I would also call out my dear friend Angela Matheny and her firm that's just done a whole rebranding, even a new name, and they're now going to be called Crucial Partners. And I think that these are all signs that you're beginning to see organizations within the space walking their talk. And I think even institutional investors within the impact investing space, and what impact investors like to call mainstream investors, you're seeing more of a synergy among different types of investors across different strategies of investing, actually paying attention to each other and being in community. And, in terms of the work that I do in terms of actual transactional finance, I'm cautiously optimistic that in the Caribbean, we're starting to see some shifting of the needle, specifically around renewable energy in terms of embracing impact investing as a strategy. So let me end there in terms of the things that I am excited about, because I think in the context of a year where the axis of the world seems to have reordered itself, those are some specific accomplishments that I think we can aim for. And of course, what Rodney and others are doing in terms of holding the entire community's feet to the fire, I think is outstanding as well.
Well, that's great. Thank you very much. So you mentioned Rodney. Why don't we just pivot? Rodney, you've been holding people's feet to the fire. That must be pretty exciting in and of itself. I wonder, what have you seen that's getting you up in the morning?
So one, I'm just really glad to be in conversation with you, Jed. I actually wore this black T-shirt, assuming that you also would have a black tee on. So I was trying to marry you, brother, but
you didn't get the memo.
I didn't get the memo. Yeah, so it's an interesting question because it really kind of depends on how you define excited. I think that for me, my excitement is also connected to certain anxieties or concerns, right? Because there is an opportunity for, a reordering, a restructuring broadly in our economy, but obviously particularly as in terms of the context of impact investing. There's been an opportunity for it. There's been a lot of, discussion about how do we prioritize racial justice? How do we ensure that there's gender equity and justice, that we're looking at things fundamentally different in different ways. But I do have the concern. So I'm excited about the conversation, right? I'm excited by, many of the things that have already been talked about, like Darren closing his fund and a number of other things that we can point to. Unfortunately, on the other side of it, I think about the fact that we can point to something like Darren. I want those to be more of the norm and sort of not like, something that we have to point to is like an example, but we want to see more of those as like wins consistently. And so my excitement is that we do have this profound opportunity to really restructure and fundamentally rethink how investment looks. And for myself, when I think about the work at our organization, Common Future, it's really about how do we ensure that there's a distribution of power and ownership, right? Because if we're talking about economic justice, if we're focusing on the impact within impact investing, what is the focus there around not just considering, different types of financial vehicles and models, but ensuring that those vehicles and models actually prioritize economic empowerment, right? That really shifts the dynamic, the power dynamic that we see within the investment space. And so that's where I get really excited. That's where I get lit up, to see sort of different orientations, to see models that have been in existence for quite some time, whether in indigenous communities and other communities that could have application in terms of the broader, more mainstream investment ecosystem. That's where I get really excited. I also think that we talk about holding our feet to the fire. That's even for myself and others in the space. But I think we're a bit early in terms of seeing like what will be the result of the last several months of attention, right? And I think part of the things, a lot of the discussions that I've been in really start to acknowledge the infrastructure, the new types of infrastructure that need to be developed to actually ensure that we're able to enable greater economic and racial justice, right, through investing. Because we've got an entire ecosystem and infrastructure that's developed that's predicated on a particular way of being and existing. And we actually have to create something different in order to, achieve the aims that we have, that, folks in this conversation have. Right. And so that's where I get really excited. I mean, it means a lot of work. It means that we all have to be really introspective about how we go about things and how do we actually ensure that we hold ourselves accountable. We think we have to ask the question of like, who are we accountable to? Right. Like what are we accountable to? And what are the power dynamics at play? Right. So when these significant institutions that are really having conversations, really beginning to articulate a different type of vision for themselves, then the question has to be, who are they actually accountable to, right? Are we still prioritizing the interests of like investor class, which really can continuously perpetuate the dynamics that we live through consistently? And so that's for me, I think about the opportunities that we really can reinvent and restructure that really does require us to think differently.
That's great. And so, Laura, you are in a completely different cultural, economic, political power context from Rodney and I and Margaret. What does this look like from your perspective? You spent years now working to build the ecosystem there in Mexico. What does it look like for you? What are you excited about from what you're seeing?
So thank you. I'm really grateful to join SOCAP from a distance. This year I really missed SOCAP. So thank you for the invitation, first of all. And it is an honor to be here with Jillian, with Rodney, with Margaret, with Jed. So for me, I think I want to end on a high note. So I want to start with the hard stuff. I think I am really worried that the impact thesis that I'm seeing currently all around me is very tech-centric and is very human-centric and is very debt-based. And, from the Global South perspective, I see a historical, monumental extraction that is debt-based. And I see debt as, a very accumulative by design tool that perpetuates inequality, that perpetuates the extraction, and where the house always wins, which is usually, the big banks. So for me, I'm really worried that we haven't changed the how of impact investing, even though we have changed the what. So I do see some things that worry me in that some of the climate perspective or of the climate conversation, they are changing the what to like actually focus on climate, but it's a very tech-centric, non-distributive focus, and it's also very divided. Like the social justice and the environmental justice are indivisible, and I see them addressed separately. For me, that's just, it's a no-brainer that it's indivisible. Like we are being eco-dependent beings and interdependent beings. We cannot address social justice without environmental justice and the other way around. So that's what's getting me worried. Scale-centric, tech-centric, human-centric investment thesis that I see all over the place, very generic, actually. But the good thing, so to end on a high note, what I really, really like is the level of consciousness that this crisis has brought upon us. Like the level of movement that I'm seeing that I've never seen before. So in Mexico, Latin America, just to let you know, ESG products were not available until this year. So very little, very late, like decades later, but literally this year, we had our very first ESG indexes. First ESG ETFs by BlackRock, like something so basic. We didn't have that available for our investors in Mexico and in many places of Latin America yet. So this year we finally had that, and finally like the banks are fighting each other who is better at ESG. This is like so new to us. And the consciousness that that regeneration is bringing about precisely because of the crisis. So I'm hearing regeneration from people that I could never expect, like Walmart. So it's been the high note has been definitely the shift in consciousness that I think can only come from making us uncomfortable. And how much uncomfortable, with this intersecting crisis, like Dr. Jillian said, I think, to the brink. So to the change of an era, no longer, an era of changes, but rather the change of an era. Like we really, really need a new system.
That's a great frame. I really like that. That's excellent. Thank you. Margaret, are you excited about the discomfort as somebody who's running a nonprofit financial services firm that's kind of lives in the muddy middle? What are you excited about? And what are you concerned about?
Well, I definitely was uncomfortable, for sure. Our clients have kept us really, really busy, and that's what's made me excited. But it was really uncomfortable as our volumes on the grant side went to 400%, and our impact investing was at 200%. It's great news on the impact side, but it was really uncomfortable for us trying to sprint to keep up with everybody. Rodney, what you said earlier really resonated with me. I think for me, is it excitement, or is it, for me, I think it's really hope, or feeling hopeful in the things that I've been seeing out there. And, Dr. Jillian, your comments earlier, like that was the first thing I wrote when Jed gave us these questions, and the racial justice movement to me just feels undeniable. And it feels like it is impossible for people not to have it in the discourse and not to have their version of what it means to be conscious of this in the work that they're doing, whether it's impact work or Coca-Cola or everybody now has to have this in their discourse. And I think that's an enormous step forward, and that makes me hopeful. I'm cautiously optimistic. There's a lot of hard work ahead of us. But that has made me very hopeful. And I have felt that in this crisis, there have been a lot of silver linings in that for a lot of us, it's been a wake-up call on the health crisis, on just the sheltering in place and how still everything got. Like the schedules were slower. There wasn't frantic travel. For my family, we weren't, ending a really rough week with an even rougher weekend as we chased the kids around a different game. In the fall, I never saw my husband on the weekends because we were each had one kid running a different direction. And so there was a huge wake up call on a very human level around reconnecting. And I'm in this work, I'm trying not to lose sight of that. And the other thing that's made me really hopeful is, I guess where I started, just the response from this community has been tremendous, not just our clients, but across the impact investing and foundation space. There's always more we can do, but I'm still really encouraged and hopeful to see the big foundations borrowing against their corpus so they can lean in and do more. At halfway through the year, we'd already broken our annual record in terms of dollars on impact investments. We've done more than 100 deals halfway through the year, which was fantastic. And that's all, thank you to our clients. So that to me has been a source of a lot of hope.
No, that's great. That's great. So I guess let me just kind of start to throw a little stink in the room. I feel like, on the one hand, I was very excited about how many people in our community kind of stepped up, stepped forward, doubled down. You saw things that, I think in terms of total portfolio. So I think in terms of philanthropy, near market and market rate capital, all that has impact. It's just different profiles of impact, risk, and return. And to see, the Skoll Foundation go from $50 million a year to $250 to see Mackenzie Scott, weigh in and be dropping, $15, $20 million hits on groups with simply in the form of general operating support, I thought was great. To see the response of so many people making commitments about what they intend to do and their statements of solidarity around, George Floyd and Black Lives Matter. I thought that was great. And here's the stink part. I don't know that people have actually thought this through, because if we really are serious about power, if we're really serious about shifting who's in the room when decisions are made about deployment of capital, if we're really serious about reorienting ourselves away from the shareholder return toward beneficiary value, we're going to have to make some really serious changes. These are not going to be comfortable changes. And I think it means that it's not really a question of growing a bigger pie. It's redistributing the pie itself in a whole different way. And I don't know, like after the amount of time that I've spent in this space, I'm actually not convinced that people are really willing to do that. And so I guess that's what I'd like to put out to you. And Gillian, it looks like you're ready to go. So why don't you pick that up and run with it?
Yeah, because I was being disciplined. You asked me for what was exciting, so I gave you that part of the story to start with. And so let me just riff right off of what you said, because I am actually quite unimpressed with the lack of ambition in the impact investing space. And I am, because there seems to be an expectation that the very same people who didn't know about racial justice and the requirement for racial justice in your investment strategy before George Floyd was murdered are going to be the experts in trying to take us forward. I started Resilience Capital Ventures in August of 2018, and I knew that there needed to be a racial justice lens in shifting the impact investing space. I didn't need somebody to be murdered to know that. And the same is true for accountability for how we're going to shift finance and investment so that the view, the version, the sense of who is an investor is not Christopher Columbus. Christopher Columbus raised risk capital to basically get lost. He was able, as an explorer, to get merchants to finance his journey, even though he didn't even know where he was going. And the same process is in place where the majority of the world has to prove that we are worthy of getting financial capital, when the folks who have got the financial capital have created this mess. So my point is, we should not be trying to make a business case for diversity and inclusion. We should be asking the people in power, why have you messed up and what are you going to do about it? So I'll leave it there.
Well, yeah, I mean, a lot of mic, you just drop the mic, I'll drop the mic too for you. I think, I mean, so much about it is really, even, the language around diversity and inclusion, it really eludes the conversation about power, which has come up, and an expectation about who owns the process, who owns the determination and decision-making processes. And that is really why there's, for me, to your point, Jed, where the cynicism comes in, because that flip hasn't occurred. And so even when you look at the philanthropic piece, Jed, there have been a number of really great things that have occurred. And there are things that we see where, as an example, hey, we're going to do general operating support to Black-led institutions. Also, let's ensure you have to have 3 years of audited financial statements, right? Which in and of itself is a structural disparity because many institutions don't actually invest in that auditing process. So you've created a process that actually will perpetuate the same problem that you're trying to unravel, right? And that's just like an example, right? when we talk about sort of the things you're talking about. And so the opportunity to actually flip the script to actually ensure that we're displacing ourselves from the conversation and actually being allies. The folks who were at the table, who have been historically, institutions and individuals historically been able to drive those decisions. To me, that's the next step when we're talking about reimagining systems, when we're talking about what's a new alternative process and having new ways of being. That is actually for me, very foundational to your point, Jed, and everyone else, because without that step, without doing that, then it's really difficult to make any moves. I also want to bring into the one thing that, because I saw in the chat, and this is not, to instigate a debate or anything, but I saw a comment in the chat about, because we're talking about redistributing power and investment and wealth, and also the idea of growing the pie. One of the things that I see is that we already had, not just me, but we already know that there are, I think the language winners and losers was raised. I think so much of this conversation is that the winners really win and the losers really lose. and so it's really that disparity and that gap that is so tremendous, right? We already have a system that enables winning and losing. And so when we talk about, at least for me, when I think about redistribution, it's really a question around how much is enough. How much can we actually, through our investments, ensure that we're building economic capabilities and power within communities that have been more extracted and exploited from, right? That is the opportunity I see for us to really be able to reimagine. So that we're talking about more of a level, quote unquote. I mean, I don't necessarily believe in a level playing field because I've never seen it. I've never experienced it in my entire life. I mean, it'd be great to get to that point. But all those historic and contemporary things that we're speaking to, they exist. And so without acknowledging that, we have to actually sort of determine, hey, if we're looking at, and Jed, I know you've been in these conversations, where an institutional investor says, hey, I really want to achieve racial justice, and also I want to have a 20x return on investment. Well, wouldn't it be great if, even if you were looking for that 20x return, that return would actually go into the entrepreneurs that have, in communities that have been excluded from building wealth and power, versus you as the investor? Those are the kind of questions that I think we should be raising at this point, and really fundamentally shifting how we process as an impact investing community.
No, that sounds great. So I'm going to have Laura and Margaret kind of weigh in here, and then we're also going to pivot to the crowd, if you will. There's a lot of really interesting comments on the chat, and I would encourage Stephanie Smith, Liesel, Ariel Brooks, Arno Hess, think about maybe coming onto the platform and participating in the conversation as we open it up following Margaret and Laura's comments, and anybody else for that matter. But I just saw some particular comments that you all made that I thought were really interesting. Laura, what are you're wagging your fingers. I see you. What's going on?
So what I'm thinking is that we are thinking about the planet Earth as an infinite pie. And there are planetary boundaries. And that is getting me really, really worried that we do have a natural capital deficit that we have to address. And, you know, energy is not created or destroyed, only transformed. So I think a lot of the natural capital deficit, we have an excess, an absolute excess of financial capital that we need to transform back. And yes, we do need to talk about distributed by design. So I think, you know, the pie of value can be infinite. The pie of maturity can be different or infinite. And the pie of depth can be infinite. But the pie of growth has to be addressed. It's either economic growth exponentially or life. There is no infinite planet. Our planet is finite. And there are planetary boundaries, and out of 9 planetary boundaries, we have violated 4 already. We have destroyed biodiversity. Ecosystems are the ones who regulate climate, and that is why we are getting, you know, pandemics. This is not going to be the first or the last. So we need to address ecosystem collapse. We need to understand we're in a finite system, even though the Excel is infinite, even though the GDP in the SDGs aims for exponential growth. That is absolutely against life. So I would think life is our first goal. And I would think we really need to readdress everything else that seems like religion, like GDP and growth, and rethink everything and unlearn everything and put life first and make impact investing life-centric by design. That would be my wish. We're on a finite planet. We need to relearn everything.
So Margaret, you're running an institution and life is a part of it, and integrating financial performance of different types is a part of it, and generating impact. How do you view this whole conversation?
Well, I don't disagree with anything that's been said. I think our clients are, and certainly our team is really concerned about both people and planet, and gratefully our clients are too. And so we have the privilege of working on both of those causes in our everyday work. I think to your original question about what's pissing me off, which by the way, Jed, I was like, I don't think I can use that word. And then the more I thought about it, I'm like, no, you know what? I'm really pissed off about this. I saw the term recently, the K-shaped recovery. And it is so true, right? Wall Street has recovered while so many other, Wall Street's gone down and then up, and then so many other communities are continuing to feel the pain. The recession is over for people who make more than $60,000 a year, and continues to rage on, for folks who make much, much less. And it makes me so mad as an economist that, the stimulus is a painful thing to do for your country's economy. You will pay the price. We will all pay the price for that. And the first round of that didn't get to the people that needed it. The second round of that didn't get to the people that needed it. And now we're going to have a third round of that. And I sure hope it gets farther than the first 2 rounds. But it makes me mad that we're going to pay the price for the first one and the second one, and it still didn't get where it needed to go. And that it's really been left to philanthropists and impact investors to bridge this enormous gap in the response between what government has done and what the private sector has done. And there's so many critical gaps left.
Right. So Tracy is providing tech support for us now. And Tracy, if you could begin letting people come on the platform and participate in the conversation. And I'd encourage the folks who are joining us tonight to ask to share your screen and your mic, and Tracy will navigate the on-ramp, if you will. But as we're waiting for that, Jillian, what are your thoughts as you listen to all this? We've kind of teed up some of the content, and I know Looney's got a lot to say here, but let me just end with Jillian, and then we'll turn it out to the crowd, if you will, and see what the perspective is more broadly speaking.
So one point that I wanted to make is that it's really important to not be US-centric, Because even if we're talking about mainstream impact investing and we're talking about ESG investing and so on, the Europeans are so much further ahead. And there's a really good piece of data that's going around about, the size of the various capital markets. There's no doubt the US has the most advanced and the major in terms of size. It overwhelms any other capital market. That does not mean that the quality is greatest. And I think that's a hard message for people who have been used to being in charge and big is best and so on, to just have the humility to understand that the subject area specialists and the knowledge capital to do what Laura is asking us to do does not it's not resident in Wall Street. It's not resident in the big impact investing firms. And I am not yet seeing that sort of acknowledgement, even when the UN is doing its work to partner with private capital. They're partnering with 5 firms led by white men to solve the SDG challenge. It's not going to work. And so every year we'll come to New York in September and we'll lament about the underfinancing of the SDG goals. But yet, as someone said on this call, the structure, the how, the who is actually leading the thinking beyond that change is just not happening.
Yeah. No, that's great. I think it's definitely part of the awareness that we have to shift in terms of that conversation. We've got a bunch of people stacking up who are wanting to come on and give comments. So Looney, you want to give a quick comment and we'll just continue this ball rolling.
Yeah, I'll pick one, which is my main focus at the moment, which wasn't spoken about by anyone on here, which is Africa. So my emerging market work is focused over there. It's about 1/7 of the population of the world. 2% of the wealth at best is sitting over in Africa. And so when we talk about solving the SDGs and inequality and every other problem that part of the world has, they can't solve it with their own money. They don't have any money, right? In big terms, we have all the money. They have none. And so I'm working to bring our money over there. And then the other piece I put in the chat window was just this idea that we, the privileged few, we, the privileged few, think we have the answers. I've spent a lot of time in the pandemic lockdown with foundations. And I know there are some out there that must do it what I think is the right way. But every single foundation I've talked to in the last 7 months has their theory of change and their program for how they're going to fix the world. And then they go forth and make grants and maybe some impact investments to fix that. And I've been the odd voice in the room saying, why are you doing it this way? We just look to see what's happening in the world, especially in Africa. We get pitched by lots of entrepreneurs, and then we fund the ones we think are good. We fund the ones we think will scale up. So I don't have any answers for Africa. I only have a path to bring money to them. I don't have any money at the moment either. I need more. But I have a path to bring them the money. They have the answers. They live there. They know how to solve the problems. I'm just trying to help them do that. And I think we need more of that. I'm not seeing enough of that at SOCAP.
Yeah, no, I think that's right. You'll be glad to know that Jillian and I were on a session earlier on that topic, and then tomorrow morning we'll be on that topic again in a large panel group exploring kind of like, entrepreneurship in emerging markets and what does that look like. So that is a topic that many of us are concerned about. I see Stephanie has joined us, and you were knocking out a bunch of really good points, very provocative, so I want to bring you into the conversation. So, please, have at it, Stephanie. What do you think?
Well, I was the one who said the loser comment in relationships, you're not growing the pie, so I'll start with that. I guess I say, in response to Laura, I do think there are boundaries, so not thinking that an unlimited amount of that can go on, but I do think that the redistribution often kind of is coming from a place of there isn't enough to grow, and that from in the capitalist system, I think that free market actually is really important. I actually believe in a free market, but I don't think that we're really living free market right now. And I think that the rules of capitalism often disincentivize growth and real creation in the economy. And I think those are some of the big problems.
Right.
I guess I don't hear a lot of detailed policy conversation around how to switch that out, like regarding derivatives, hedge funds. Like, how could you make things smaller without them, but like tax codes, things like that. And I think in doing so, you could real
Okay.
a lot of real. Go ahead,
Stephanie. You're breaking up quite a bit, so it's hard to understand your contribution. But I hear you raising issues around policy, around the framing about growth versus no growth, and I heard you also I saw you in the chat line talk about who makes the decisions and ownership. I see we have Ariel Brooks, who's with the Center on Economic Democracy. And of course, you guys have been doing work in that area for many years. Ariel, you want to pick up on some of the themes that Stephanie was raising and kind of take us to the next level in that?
Sure. Can folks hear me okay?
There we go.
Yes.
Am I? Okay, great. I couldn't hear Stephanie, unfortunately. I hate people who come on and just like start in a new place, but I really was having trouble understanding. But yeah, I mean, I wanted to pick up on Rodney's pieces because the ownership and control of decision making is so important. And so many of you have said this so much better, but also recognizing that it's just like impact investing was small before and now has a lot of infrastructure that supports more mainstream impact investing. We can't just pour money into communities to make decisions without also supporting the infrastructure to make those decisions. So we're just wanting to amplify that we need to build out the entire ecosystem and infrastructure to be able to shift community control. And I think that so folks who are worried about the scale of the pie, like right now, folks who are aligned, just start shifting your money to the vehicles that already exist, and then we'll and supporting the infrastructure. We'll build the train while we're driving it. Like, let's not let the considerations about the size of the pie stop us now, because we need to do a lot of experimentation and just start moving community control, moving decision making about finance to communities, and we can start now, and then we'll grow it from there.
And what about this issue of who gets to call the shots?
Be on, and great to hear from all of you. And I will go back to viewing.
Okay, excellent. Reaction to the process in question?
Okay.
Rodney, you've been involved in some of the community development side of this in terms of supporting new leadership, new voices that are engaging in a different way around this question of capital and who determines what should go where. What are your thoughts when you hear some of these comments?
Yeah, I completely agree with Ariel and the work of Center for Economic Democracy. I think even one thing I would say, Jed, is, and this goes to like our own mindset and how we think about systems. I argue that the folks that Common Future and others work with, obviously Center for Economic Democracy and so many others, these aren't new voices or new leaders, right? It's the spaces that we occupy and sit in have not recognized the tremendous leadership and innovation that they have brought forth for years. And so I think even just the framing around it goes back to what was pointed out by Dr. Jillian in terms of who do we consider experts, right? Because there's a whole level of expertise that is required for the things that we're talking about today in terms of like the type of infrastructure that needs to be built, et cetera. And the understanding of, I think it was Looney had pointed this out, that people want to understand, or we're still thinking about, what can you guarantee me 3 months from now, 6 months from now? And if anything, if COVID-19 hasn't taught us anything, is that we need to develop our skill set to be nimble and agile and be able to have a learning orientation And that is something, quite frankly, that the organizations and leaders that we work with already have in spades, right? Because you're kind of forced to have that sort of ability to operate within ambiguity, right?
Yeah.
And so those are our skills that we can prioritize more. And so I bring this up just because it's really important for us to understand that these are not like, for many of us in the space, it might seem like these are new voices or these are new skills, but these are actually skills and perspectives that have been cultivated for decades, centuries, right? I mean, a lot of this is grounded in indigenous wisdom. And so I just want to continuously bring this up because we have an opportunity to really reset our perspectives in the impact investing space that doesn't prioritize what has been the predominant perspective and frameworks, but we can actually learn from so many others. So hopefully that adds a little bit more perspective in terms of.
No, I mean, these are really critical points. Jillian, you were raising this before. But before we come back to you on this question, though, I see that Liesl Simmons is with us. Liesl does philanthropy. She does impact investing. She manages her family office has a larger portfolio of diversified assets. How do you react when you hear these discussions and conversations? You've got major investments going into Africa. How do you connect with local leaders and the whole decision-making piece? What does that look like to you?
I'm gonna leave Africa just aside for a second, which is a big part of our portfolio, but mostly just a massive thank you for this conversation, which has been incredible. I think I weaseled my way into the comments section because I did a cough wealth tax comment that people like. So I want to first address that, which is, and I was actually part of in this same booth earlier, a conversation around why don't more impact investors essentially invest in policy work, whether it's through civic tech or whether it's through their own electoral work. This is a massive part of what we do at Blue Haven, but we never get to talk about it at SOCAP because it's not, it's not investable. It doesn't feel investable. But I think that where my tax dollars go is actually a massive part of my investment portfolio. I think who gets to be the decision makers around where tax dollars go. I mean, the US government is the biggest buyer. It's the biggest asset allocator on the planet. It is. So who we elect to be in those positions of power, I think, is an investment decision as far as I'm concerned. So anyway, I think that we have to bring our civic engagement mindset sort of to this. I know I'm preaching to the choir on this call, but I just kind of wanted to up that. And I don't see things like a wealth tax as being making the pie smaller or not growing the pie. I think about it as there are returns on investment that traditional investors will never get to enjoy, but our society will. And so they're incredibly, incredibly important. So, I mean, I would just say, like, we have to think about tax policy and we have to think about that as reinvestment, not necessarily as redistribution. The more local it gets, the better it gets. But that being said, I'm at the tippy top of the very, very top 1%. I'm very happy for my assets to go wherever they need to go. And so kind of that's really the main point I wanted to make. I can talk about African entrepreneurs in our portfolio and why we should be investing there as well. But I think this is the more important point to make at this point in time with this audience, if that's okay.
Well, that's great. Thank you. And as you hear that, Dr. Jillian, how do you respond? Because you were raising the question of leadership, expertise. Who are the people who should be creating and establishing these policies? And how do we ensure that we have that? As I saw a scroll by somewhere here, who defines what an expert is? And how do we understand expertise on its whole?
Okay, so to answer that question, I'm going to try and keep it to answer that question, I'm going to try and keep it local. So to keep the US folks focused, an expert is the person who knew that there was an equity problem in the public health system before COVID-19. And those are the people that you need to be investing in. And if we take it back to 2016, we knew that there was a problem in the middle of the country, just no one was interested in fixing it. All of the problems that have been sort of, people use phrases like we've torn the plaster off and so on. There are people who have been working on these problems, the policy, the training, the advocacy, the community foundations. There is an entire ecosystem that has been working on this, just not in the spotlight. And so my point that, if I made it about Africa, about building out the ecosystem, it would seem far and exotic. I want to make it about the Bronx. The fact that you have students who cannot go to school because there is no digital access. Oakland, Baltimore, Rochester, parts of Georgia. Let's fix the domestic problems, because some of the parts, the Mississippi Delta has social demographic characteristics that make it more in common with the exotic developing world than New York or San Francisco. So there's a lot of domestic work to get busy on, because 2020 has shown that there's stuff that just doesn't work. It's not working. And part of why it's not working is because the expertise of those subject area leaders is not taken into account in terms of how financial mechanisms are set up, how they are governed, and what actually gets deployed.
No, that's great. And so we've covered a wide range of areas and issues now. We've got just another 5 or 10 minutes before we wrap up. I'm wondering, Evan, you're like in line there, coming on. I'm not sure if you're going to have your video on or not, but I'm wondering, what of these various issues would you like to pick up on? And could you just introduce yourself so everybody knows who you are as well?
Sure. I'm keeping my video off just to see if you guys can actually hear me. Keep the broadband down. So I'm the Senior Director of Impact Investing for Catholic Charities USA, and I don't know, maybe just to bring a little more hope into the conversation. I have been very heartened this year by seeing all of the discussion around worker-owned, multi-stakeholder cooperatives and devolving assets down. I come from the faith space. I worked originally with an Islam-inspired group, the Aga Khan Foundation and the Aga Khan Development Network, to set up their impact investing, worked through the foundation, then moved on to Catholic Relief Services, and now I'm at my first domestic organization, Catholic Charities USA. And something that I have found over the years in working with these groups, and the reason that I choose to work with them, is because they are all the community. They do not leave. There is a Catholic Charities in every diocese in the United States. The Aga Khan Hospital, which is in Karachi, Pakistan, one of my first impact investing deals, is a hospital for everyone that then creates for secondary hospitals, 218 outreach centers throughout the rural areas of Pakistan. And they're not going in with a project and then leaving. They are run by the community, they are run for the community. And I would say within the Catholic faith, this term of what we call subsidiarity, which is devolving decision making down to the person who is most affected by it, is something that we are really working on. And that's why we're getting very involved in this kind of cooperative movement, and as I said, devolving wealth and power down. So, I just wanted to kind of put that in as well. I know it's a special time, but I'd love to hear kind of people reflect on their experience so far at SOCAP and in their other conversations of seeing this openness during this time.
Sure. So Evan, your comment resonates on a number of levels, and the term you used was subsidiarity.
Subsidiarity. Yes, it's one of the Catholic social teachings, and I always have to talk about it because it is something that is not self-explanatory, like option for the poor. Most people can figure out what that means, but it is a teaching of you devolve the decision making down to the person who is most affected by it. There's a little caveat, you know, with like, and is also capable of making that decision. So, you know, if there's someone who has a mental health problem or something like that, it may not, but you know, that is something that is constant within the Catholic community, within the asset owners, and all those looking to move into this area.
No, that's great. I wonder, we're going to have to start to wrap this up right now, but I wonder if you have any links that you could put into the chat thread on that topic, because you know, quite frankly, I've read a lot on different religious and wisdom traditions. That's the first time I've heard that. And I think that sounds like a great concept. So obviously there's a lot of experience and history that we need to bring forward into our conversation. So if you have anything to share on that, that would be great. We do only have about 4 or 5 minutes, so I want to just kind of run around the horn so that folks can give kind of closing comments. Laura, why don't we start with you? You always have such a positive look on your face for every engagement. I just love that about you. So are you happy? Are you angry? Are you positive? We end this discussion tonight.
I'm very happy, and I want to clone Liesel and have many Liesels in Latin America. and I just want to say, like, all of the policy work, you know, the national advisory boards from the global steering group, that's what we're supposed to be lobbying for, you know, the systemic macroeconomic changes. And I think, especially in Latin America, I don't see a lot of funding for that. I never see it. So I think we do need to invest in what Liesel is saying, but that's what the national advisory boards are for, intentionally. And in the distributed by design that Evan was just mentioning, I want to say in Latin, the word company means sharing bread, and sharing bread must be, you know, your loaf and my loaf, instead of like keeping the bread up here and giving the crumbs down there. So I want to, what she's saying, like, precisely, that is the distributed by design, your loaf of bread and my loaf of bread instead of crumbs. And I just wanted to say I'm really, really happy about everything I've been hearing here. And you guys give me hope, and thank you.
That's great. Thanks so much for that. Liesel, I saw you raising your hand. Do you have a quick thing to drop in, or shall we continue around?
Continue around. I was just holding up my notebook because I'm taking notes.
Okay. I'm glad to see you're being responsible and tracking this. That's excellent. So, Rodney, Rodney, how are you feeling at this point? Are you positive? You hopeful? You're angry? Did we piss you off even more?
I think I'm always all those things at one time. So I think that's just the reality of it, right? The thing I would say, and Looney said something in the chat about venture capital being, you know, like 78% of venture capital, for example, being, you know, grants, really. And I responded with the fact that I oftentimes say that venture capital is philanthropy, but for white men, because if you actually look at the data, that's what it ends up being. And so I bring this up because this entire conversation has, one, it's got me, you know, revved up and everything as usual. But it also just focuses on, you look at like an asset class like venture capital, right? Which is totally fine with investing in a particular category of individuals and communities, right? But when you start to talk about all these other opportunities that we've been discussing today, we have to really investigate the sort of ways that biases and racism really and sexism shows up, right? Because we created an entire asset class that really demonstrates how we're okay with a mediocre form of investment. And yet we won't be able to we will not even dare to think about the possibilities of investing in whole swaths of society that have not been invested in and have only been exploited. So anyway, I say that to just point out about like a mental model for us to even compare what we're putting capital into and what we're completely ignoring.
No, that's great. No, thank you for that. Margaret, closing thoughts?
So I was going to say, I agree with Rodney. It's all the emotions at once, and that's what keeps us feeling the passion for all the work that we're doing. And but you need that hope in there to keep going, and that's what I'm holding on to. Being with this community at SOCAP is what gives me hope. And it's bigger every year, and more, I feel like we've really hit this inflection point where we're talking more. I don't know, 5-6 years ago, there was a lot of talking and not a lot of doing. There's much more doing these days. There's much less explaining what it is and why it's worth doing. And so I really feel like we've hit a very different part in the evolution and the adoption of impact investing. And I'm excited to see it pointed at some really important, long-standing issues, and really hopeful that we'll make traction.
That's great. Dr. Jillian?
So I'm encouraged. I'm encouraged because we're having a conversation that's very meaningful and substantive, and we have a lot of important players in that conversation, and I think that we're listening to each other, and more importantly, hopefully, that there's something that has landed about the ways in which the US might have to listen and learn and not assume that it knows best for the rest of the world, and to even consider that there are things to learn from the rest of the world, even though there is so much more financial capital in the most advanced capital market of the world. So I'm very encouraged by the quality of the conversation, because I think that augurs really well for what we can do together.
No, that's great. I really appreciate ending on that note, because really what any of this is about is relationship and how we connect with each other and have respect for each other. Laura dropped her Latin around the meaning of comfort. I would offer the Greek of compassion means to suffer with. And I think if there's one thing we've seen over the last months is the illusion of separation really dissolving in real time for all of us. And now that we're more deeply connected in various ways, I think it's time that we step up and really explore those relationships in a more authentic and sustainable way, just to use two of my other buzzwords for tonight. Thank you all very much for being with us. I really appreciate your participation, and look forward to more going forward as well. So take care. Have a great evening, everyone.